Welcome back to Portfolio, everyone. And in this video, we're doing a big stock comparison between Costco versus Walmart, two of the largest retailers in the world. We're going to go over some key financial metrics of each company, do a direct comparison at this point in time to see which company may be the better buy and which one may outperform the other moving forward. We're going to look at some future expectations for the company and the overall industry as a whole, and just analyze each individual company to see which one we like right now. These are some of the largest retailers in the world. They bring in insane amounts of revenue year over year. And of course, they operate all along the United States and around the world as well. So these companies are well diversified. They both own and operate different retail locations and different retail brands all across the world. And they, of course, are some of the largest names in the industry. So in this video, we're going to do a direct comparison between the two, determine which one we like right now for our portfolios and which one we think will outperform not only the other, but actually outperform the overall market over the next 5+ years. So as you know, everyone, I am the Gen Z investor, and every single day on this channel, we talk about different stocks you can buy, overall stock market performance, and any other big stock market news and headlines. And today, like we do every single Saturday, we're doing a big stock comparison between Costco and Walmart. If you have two companies you want to see in next week's battle, comment them down below and we'll add them to the list, and we will get a stock battle done between whatever company you want to see. So thank you for watching. We're going to dive right in, and the first thing we always take a look at is how these companies have performed during the pandemic. We've gone through a point in time a couple months ago where the entire world was essentially shut down. There was a global pandemic and economies slowed down completely. So what we're going to take a look at is how these companies have performed during that economic slowdown, and actually both have done very well. These companies have actually benefited from this slowdown. Consumers were stocking up. Both of these companies posted days of revenue that mimic Christmas Eve, Boxing Day, some of the largest shopping holidays of the year. They saw those numbers happen in the month of March, which is usually a slow period in time for both of these retailers. So Costco is up over 17% on the 12-month chart. You can see here they kind of showed us like a slight decline in March, but a very, very quick V-shaped recovery and somewhat flat but overall upward trend over the following months. If we take a look at Walmart's price chart, another sharp decline in the month of March, but rapid, fast recovery and continuous upward trend over those past couple months as well. Walmart is up 23% in the past 12 months. So both of these companies have continued to shine, continued to grow, and these were actually some of the retailers that were allowed to remain operational when most other businesses were forced to shut down. If we take a longer term perspective, over the past 5 years, Costco has returned a total of 169% to shareholders, compared to Walmart, which has returned 148%. So both of these companies have outperformed the market. The total market return over the past 5 years is around 91.8%. And both of these companies have outpaced the market, but Costco has slightly outpaced Walmart over the past 5 years. Now we're going to jump right into the comparison. And with this comparison, like we do every single Saturday, we look over some key financial metrics. In no way is this a full in-depth analysis of each company, and this cannot be the sole research used to determine which one may be the better company overall compared to the other. But what this does is this gives you a quick overview of the key metrics that you usually take a look at when researching a company and show which company may actually have better short-term current financial metrics compared to the other. We're also going to take a look at some estimates because, of course, when we buy in today, we're expecting future growth. Past performance is great to take into consideration, but we want to see that past performance mimicked or actually improved over the next 5-10+ years when we are actually holding the shares. So let's get right into the battle. The first one we like to take into consideration, and the first battle today of the 11 key points we're going to take a look at, is market cap. How large these companies are being traded at. So Walmart has been a retailer for an extremely long period of time. They are a massive company operating across the world. And they have brought in billions and billions of dollar revenue each and every day. If we take a look at their market cap, current market cap at $404 billion compared to Costco's market cap of $153 billion. So Walmart is the larger company. Of course, market cap shouldn't really impact what companies you invest in. There's a lot more important financial metrics and considerations to take into account, but a lot of investors like to stay away from smaller companies, so I like to include that in this battle. But for both of these companies, which are both mega cap companies, it doesn't mean too much, but showing the market cap also puts into perspective other sorts of metrics, like this next one, which is top line revenue, or total revenue from the income statement in the past 12 months. $542 billion of revenue from Walmart, compared to $160 billion of revenue for Costco. Walmart generates some of the highest revenues in the world. They are one of the companies, they are in the top 3 most revenue generating companies on the entire planet. This company brings in massive amounts of revenue each and every day, and it's absolutely incredible to see $542 billion of revenue brought in over the past 12 months. So Walmart wins this battle, outpacing Costco's $160 billion, but overall, compared to their market caps, which we will take into consideration with the price to sales ratio, nothing too shocking with regard to these revenue numbers. So if we take a look at the bottom line of the income statement, that is profit or net income, Costco brought in $3.7 billion of net income in the past 12 months, compared to Walmart's $17.9 billion. So once again, Walmart wins this battle, but of course we have to keep in mind that Walmart is the larger company. They've been operational for a lot longer period of time. They bring in over 3 times as much revenue as Costco, so it's to be expected that they bring in more net income as well. To compare these on more of a fairer note, we have the profit margin. So for every $100 of total revenue, how much are we keeping for net income towards the business? Costco's profit margin and Walmart's profit margin are extremely slim. Costco has a 2.3% profit margin in the past 12 months, compared to Walmart's 3.3%. So Walmart does have the higher profit margin right now, but overall, both of these companies have extremely low profit margins. That's just how they operate, like how the industry they operate in works. Very low profit margins. If you want to compare this to just say another large company, a company like Visa has a current market cap at around $450 billion, so closer to Walmart. Visa's profit margin is over 50%. So for every $100 of revenue Visa brings in, they keep over $50 as net income, compared to Walmart, which would keep $3.30. So you have to take into companies in different industries of the market and how different industries work. If we were to straight compare Walmart versus Visa, you would know that Visa dominates, but they also operate in a very different sector of the market. And of course, their share price fluctuations will change through different economic impacts, and it will change in a different manner than Walmart. So when we move on to the next metric between Costco and Walmart, the next battle we have to take into consideration is revenue growth. So it's amazing that Walmart is bringing in these crazy amounts of revenue year over year, but how is that revenue growing? We're buying in now, and we want to see revenue, income, and the overall share price grow into the future. Costco's done a much better job. Their 3-year average revenue growth is at 8.76% annually, compared to Walmart's 2.55%. So Costco's done a much better job of growing revenue year over year, which is of course to be expected. Both of these companies are extremely large. Walmart is a cash cow company. They bring in huge amounts of cash each and every year, but they are slow growing. Now, of course, they're coming out with Walmart Plus to help compete with Amazon, which they're hoping to help drive up online and digital sales, bringing up overall total revenue and of course total income. But with regard to revenue growth between these two companies, Costco wins this next battle. Moving on from the income statement, we now have the PE ratio. So this is a forward PE for both companies. At their current price point, Walmart is being traded at a PE of 26.74 compared to Costco's 40.25. So the lower PE ratio, it just indicates you can buy into the company for less price compared to their dollar of earnings. So you can buy into Walmart, you would pay $26 for every $1 of company earnings, compared to Costco where you would have to pay $40 at their current price point. So Walmart wins this battle. They do have the lower PE, and when directly comparing them, Walmart may be the cheaper one to go with. Now, if we compare price to sales ratio, this compares a company's market cap to their total revenue, and the lower of this once again wins. Just shows you're getting in maybe at a better valuation. So when you do a direct comparison of two competitors within the same industry, you can see here that Walmart's PS ratio of 0.75 compared to Costco's 0.95, Walmart may be considered trading at a cheaper or more affordable valuation right now with regard to their revenue and their market cap. But of course, these financial metrics are not everything. You have to take a look at future outlook as well. You have to read companies' financial statements to see their future growth expectations and what they're doing to expand and grow the business over the long term, because there's more to take into consideration than just current financial metrics. We're investing for long-term growth, and we have to understand that companies must have a plan to grow over the long term, and those are the companies we want to be invested in. Next ratio we have to take into consideration is dividend yield. Both of these are dividend-paying companies. I personally only invest in dividend growth companies, even though these companies are both paying somewhat lower yields. Walmart current yield at 1.51% compared to Costco's 0.81%. Walmart wins this battle with the higher current yield. That's great, but of course, how fast is the dividend growing? Same consideration with regard to revenue. It's great that Walmart brings in more revenue, but Costco has been growing their revenue at a much faster rate than Walmart. So Costco's current yield is lower, but if we take a look at their 5-year dividend growth rates, Costco is destroying Walmart. Costco's 5-year dividend growth rate is at 14.5% compared to Walmart at only 2%. So each and every year, Walmart is only raising their dividend to match the 2% average inflation rate in the United States. Meanwhile, Costco is destroying them with a 14.5% annual average dividend increase over the past 5 years. So even though you are buying in at a lower yield right now, your dividend is growing at a much, much faster rate than if you were to buy into Walmart's 1.51% current yield. That's why, once again, for people who aren't strong investors in individual stocks right now, you have to do more research and just take a look at the dividend. So if you were a person who wasn't too strong yet with reading financial statements or actually understanding on how to analyze a different company, you take a look and you think, okay, Walmart's bigger, they make more money, they pay a higher dividend, lower PE. Those are some of the quick things that people only take into account. But if you take a look, Costco's been growing at a faster rate. They may have a lower dividend right now, but they are also growing their dividend at a much, much faster rate than Walmart, which may lead to a higher return with regard to cash flow from the dividend over the long term. If we move on, next is dividend safety. So dividend safety score comes from Simply Safe Dividends, and it just gives you an indication on the risk of that dividend getting cut or reduced anytime soon. So the highest dividend safety rating possible is 99, and Costco actually achieved that extremely high dividend safety rating, the highest one given out of 99. So Costco currently pays out a dividend that is extremely, extremely safe. Very unlikely to see that dividend get cut anytime soon. This company is very likely to grow that dividend year over year for the sustainable future. Walmart comes in at 78, so their dividend is still considered safe, not at risk of being cut this year or within the next 12 to 24 months, but it is not as safe with regard to how they're evaluated compared to Costco. Next is payout ratio. How much earnings are being distributed as a dividend versus being retained back into the business to grow operations? Costco pays out 32.5% of their earnings per share as a dividend, compared to Walmart, which pays out 40.4%. So Costco is using less of their income to pay out as a dividend. They're retaining more money back into the business and can grow operations. Walmart pays out 40% of their earnings in the form of a dividend or a cash payment to shareholders. Both of these are extremely sustainable. For companies where they are lower yield, high growth, we like to see payout ratios below 50%. For more high yielding stocks where they're yielding 3.5 and higher current yield, where those are high dividend yielders with lower dividend growth, we can expect a payout ratio around 75% as the highest. So both of these companies have very sustainable payout ratios. I do believe they will continue to pay out their dividend over the long period of time, and I do not believe either dividend is at risk anytime soon. Next, we have to take a look at the balance sheet. We went over some income statement facts, we took a look at the dividend, and we're going to wrap up the battle with taking a look at two balance sheet metrics. The first is the current ratio, which indicates how much companies' total current assets can maintain or deal with or pay off their short-term current liabilities, which are due within the next 12 months. So we like to see companies with a current ratio of at least 1.5, just to show that they can deal with all of their short-term liabilities with ease over the next 12 months. So Costco has a current ratio of 1.11. The higher current ratio wins this battle because it shows they have a greater ratio of assets compared to liabilities, when Walmart only has a current ratio of 0.79. So Walmart does not actually have enough total current assets on hand to deal with their short-term liabilities within the next year. The final battle we have to take a look at is the debt to equity ratio. And the lower of this indicator wins once again, which goes to Costco. They have a debt to equity ratio of 0.73 compared to Walmart at 0.86. So if we take a look at this battle, 1, 2, 3, 4, 5, 6, 7 points for Walmart and 1, 2, 3, 6 points for Costco. So Walmart wins this battle 7-6. Of course, there is much more you can do to compare these companies. So this battle is extremely close. For me personally, I own Costco within my portfolio. I personally favor Costco over Walmart. Although they won this quick battle, there's a lot more to each company, and I like valuing companies that are growing or have high, fast, expected growth year over year. We saw that Costco has actually outperformed Walmart over the past 5 years, and they have almost doubled the performance of the overall market, and I believe that trend will continue. I like that they're growing revenue year over year much faster than Walmart. I like their very high dividend growth rate. They're extremely sustainable with dividend payout and their dividend safety. And I really, really like their low debt to equity ratio and the high current ratio above 1. So Costco for me wins this battle, even though they might have lost with regard to points. The first couple points from the income statement aren't a true fair comparison because yes, Walmart is a larger company, so it is expected that they bring in more revenue and more profit. But overall, their profit margins are very similar, only a 1% difference. Costco has done a beautiful job of growing. I believe Costco has a lot of room to grow moving forward, but Walmart is also an interesting player right now because of that Walmart Plus, which is starting within the next few weeks. And I do believe that will be a really big game changer for the company, expose them to a much greater market share than they have really had access to because Amazon was the main player. And I think both of these companies could make a nice addition to your portfolio. But with regard to how we do our battles on this channel, Walmart wins 7-6. I personally own Costco in my portfolio, but of course, both of these companies are solid companies, blue chip names that I do not believe will be going anywhere anytime soon. Thank you for tuning in, and I will see you in tomorrow's video.